I think we have to be transparent about the risks, and we have to be realistic about what's going on.
But I would like to make it clear again today that we will not forget those who are not going to be brought to safety by the airlift.
For those who carried out this attack, as well as anyone who wishes America harm, know this: we will not forgive. We will not forget.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Friday, the 27th of August. I'm Francine Lacqua here in London, and here's what's coming up on today's program. A deadly attack at Kabul airport kills at least 72 people, including 13 American service members. Joe Biden promises retribution on those responsible, a group called ISIS-K. And global stocks hold steady. Treasury yields edge lower as investors wait to hear from Jay Powell at the virtual Jackson Hole gathering. China steps up its tech crackdown. A report states that Beijing is planning new rules to ban U.S. IPOs for firms that handle a significant amount of user data. So let's get straight to our top story. And Joe Biden's bid to complete an already messy U.S. withdrawal from Afghanistan has been rocked by a devastating attack in Kabul. Now, the blasts at the airport killed at least 13 U.S. servicemen. A Taliban official tells Bloomberg that 75 Afghans are dead and about 150 others wounded. Here's how world leaders have been reacting.
For those who carried out this attack, as well as anyone who wishes America harm, know this: we will not forgive. We will not forget. We will hunt you down and make you pay.
We know that the window of time is closing, and it could be 10,000 people who are brought to safety. But I would like to make it clear again today that we will not forget those who are not going to be brought to safety by the airlift.
What this attack shows is the importance of continuing that work in as fast and as efficient a manner as possible in the hours that remain to us, and that's what we're going to do.
All of us are put in a situation which is no more under control. I think de facto nobody expected such a rapid and brutal situation in Kabul.
Sadly, it was not unexpected, as we'd previously flagged. But even events of that nature, when they are sadly expected, still make your heart sink.
Well, let's focus in on the fallout in Afghanistan and around the world. Joining us is Bobby Ghosh, Bloomberg opinion columnist and Bloomberg executive editor for international government of relations, Rosalind Matheson. So thank you both for joining us. Ros, if we start off with you, what's the situation like on the ground? So how many allies are still there trying to evacuate people? The clock is ticking. That deadline should still be August 31st.
Well, that's right. A lot of countries are now saying that they've actually wrapped up their evacuation flights or in the process of doing so. The UK, the latest one to say that in a matter of hours they will be done. And, of course, acknowledging at the same time that some people will be left behind, either willingly or unwillingly, particularly Afghans who've helped the British, the Americans and others over the years will simply not be able to be evacuated before the deadline. So you've got that kind of chaos still occurring at the airport. It's very volatile there. There are still large crowds there. Despite the attacks yesterday, people are not deterred by that. They're still trying to get out and on an aircraft. The US, of course, saying that it will continue through to the August 31 deadline, and buses are still turning up at the airport. We're still trying to get clarity on exactly how many people were killed or injured in yesterday's attacks. There are now reports that up to 100 or more Afghans were killed and many more wounded in those attacks, and of course the US servicemen as well. But because the power lines are down in many parts of Kabul, it's very difficult to get a read on exactly how stable or not things are at the airport right now.
Bobby, what do we know about ISIS-K, so the group behind, of course, these two bombs? It was coordinated. I imagine, the U.S. and allies are worried because it was so coordinated. What was the end game? Who were they trying to target?
Well, I think they were trying to say, if this is the ISIS-K, which looks very likely, there have been some claims that they have, on some social media sites, they have taken responsibility for it. If it is them, then the signal they're sending is that we're here, just as the United States is leaving. We're here. We're going to be a major force in this country. We have the capability of mayhem and murder on a large scale among the Afghan people. It's symbolic. The fact that they were able to kill large numbers of people, sort of it played into their hands. I don't think they could, if this is something they planned days or weeks ago, I can't imagine they would have expected such a large casualty number, because as we've just been hearing, nobody could have predicted the chaos that followed the decision of President Biden to leave. So in any case, this is them saying we're here, the Americans are leaving, we're here, we're still relevant, and we will need to be reckoned with.
Rosie, is there a chance that actually the deadline gets extended, the deadline for evacuating people out of Afghanistan?
Well, the US government, Joe Biden, and the White House have been adamant that the deadline will not be extended. They will complete their evacuations by August 31, and unfortunately anyone who's left at that point will remain behind. There are still about 1,000 Americans obviously still in the country, and the US says that about 2/3 of those want to leave. If anything, the attack may harden the intention to leave by August 31, because of course, the US president can't afford any further casualties from American soldiers, with those 13 service members killed in those blasts. American voters wanted their soldiers out. They wanted the US extricated from this war, and images of US soldiers being killed or hurt in Afghanistan won't play very well at home. So if anything, this has probably solidified the idea that they have to get out at this point, or they'll be mired in there forever. And that's sort of the brutal political calculation that Joe Biden and others are probably making at this point.
Bobby, could you see a situation where actually the U.S., who still has to recognize the Taliban as the official government in Afghanistan, actually work with the Taliban to, put away more factions that are more extremist?
Well, that's what we're hearing from Washington, that they have been working a little bit with the Taliban. They have been trying to coordinate some of the security in the routes to the airport, and that they have been sharing intelligence on potential attacks from the local ISIS affiliate. This is a very dangerous strategy, though. I mean, we should not imagine that the Taliban are like a monolithic organization where any discussions you have with the leaders will trickle down into action on the ground. The Taliban is made up of many factions. Some of those factions are very close to Al-Qaeda. Even if at the leadership level, the Taliban and ISIS are opposed to each other, at the level of middle-level commanders, at foot soldier level, relationships are fungible, loyalties are fungible. Just because you give one set of information to the leadership of Taliban doesn't mean that lower down that organization, people will not take that information and share it with the very people that you're trying to protect yourself against. So this is a very, very complex situation. And I think the U.S. probably should not expect too much in terms of collaboration and coordination with the Taliban. Right now, the Biden administration says, well, we have an interest in common. We both want the U.S. to leave the country. But that's not necessarily how foot soldiers in the Taliban feel. They may want to have a proportion of Americans still in the country just so that they can make these kinds of statements, that they can attack them, kill them.
Yeah, thank you both for joining us. Opinion columnist Bobby Ghosh and Bloomberg's Rosalind Matheson. Now coming up, global stocks hold steady as investors also eagerly await Jay Powell's address at Jackson Hole. It's virtual, but it's still a speech. Of course, we're expecting or hoping for more clues on the Fed's plans to taper monetary stimulus. More on that next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Angel Feliciano. Hi, Angel.
Hi, Francine. China has issued its most detailed warning yet against the excessive work culture that pervades the country's largest corporations. A trio of government agencies has published an essay highlighting labor violations known as 996 because of the common practice of working 9 a.m. to 9 p.m. 6 days a week. French President Emmanuel Macron has urged Ireland to join a global deal on a minimum corporate tax rate during his first official visit to the country. Ireland's economic model has been built on low rates to attract multinational firms. It's holding out against signing a preliminary accord for a minimum tax of 15%. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine?
Angel, thanks so much, Angel Feliciano there. Now, the Jackson Hole Symposium is kicking off virtually, of course, but global markets will be watching for any indication on the Fed's timeline for tapering asset purchases when Chair Jay Powell actually speaks today. It comes after hawkish comments from a range of Fed governors, including Kansas City's Esther George.
I think it's important to really center on when we believe the progress in the economy is sufficient to start that process. And that's really where I'm focused. In that sense, I think we should get started this year so that we can begin to pare back the amount of accommodation, watch to see how the economy unfolds after that.
Now, we're delighted to be joined by Eric Nielsen. He's Group Chief Economist at Unicredit. Eric, thank you for joining us. Now, we had three Fed hawks, once again, not surprisingly maybe, being hawkish, saying that the Fed should start tapering ASAP. Are we too focused, actually, on when the Fed starts tapering, that when it should end tapering, and therefore possibly also move around with rates?
Yeah, I think, Francine, that's a good way of putting it. In the markets, we get very excited about whether it's November, or December, or January. But from an economics point of view, that doesn't really matter that much. We're in the camp now who think that the message is clear that they will start tapering before the end of the year. But the really interesting question is, what do they do with the balance sheet going forward? How long time will the tapering take, and how will the real economy react to it?
Yes, how long do you think that will take?
I would be shocked if they end the purchases in less than a year. I mean, something along those lines. I mean, my guess or our guess is that probably will announce a tapering of about, say, a total of 15 billion down per month, starting here at the end of the year, thereabouts. So then you'll be done sort of in a year's time, in a bit over a year's time or thereabouts. So that'll be our best guess. But you know, the underlying economics, the inflation story, the labor market, everything is so uncertain now. So I think it's forecasting this is, we are kind of paid to do it, but it is really a fool's game right now, right? There's a Delta variant out there. There is the bottleneck story. There are so many uncertainties. I can't remember anything like it. So we have to step forward very carefully, and the Fed hopefully too.
But Eric, I mean, given all the uncertainty, actually, what would a policy mistake look like? So at this point, are the balance of risks tilted to having too much stimulus for too long a time? Is it ineffective, or is it actually, could it become harmful?
Well, it could be, and certainly, as you know, the U.S. looks like they're going to bring through these enormous fiscal packages, which are probably on the big side of what would be wise. So I think the risk is, of course, that the Fed kind of stays with the accelerator down a little bit too long, and we then get an inflation that at the end of the day would be more costly to bring under control by a sudden break. Now, I'm in the camp who thinks that a lot of the inflation we are seeing is bottleneck stuff. And if we were to get 4% inflation for a bit, it's not the end of the world. So I'm not too worried about it. But I think, and this is very different between the U.S. and Europe, to be very clear. In the U.S., there is a risk of overheating. And if that were to happen, the downside risk to this is a more sudden stop down the line. And so I think that in the U.S., the risk is tilted to that side.
So, Eric, talk to me a little bit about sequencing. You know, when are you expecting interest rates to actually rise? And if there is a surprise to the upside on inflation that's not really transitory, would they have to raise rates sooner than expected? And what does that do to the real economy?
Yeah, so that's first, the answer to your question is that we think they're going to make the first rate hike in the second half of 2023. Guessing work, again, it's so uncertain. But the risk is clearly moving towards an earlier rate hike because the economy is responding very well to the what we hope is the end of the pandemic in sight and the enormous fiscal expansion in America. So some of the inflation numbers, obviously, will stay higher for a while. And depending on how the labor market moves forward, and maybe we'll learn this afternoon a little bit more about how the Fed thinks about the labor market and what does it actually mean to get sufficient further progress, which is what they're talking about in terms of the tapering. But all the details they have now introduced into their forward guidance on the details of the labor market, I find it very difficult to know what exactly it means. So some clarity on this and what they would like to see remains to be seen, of course. But I think the risk is that they wait too long, but the signals are pretty clear, Francine. I think now that we are very close to the beginning of the tapering, and then whether they go 15 billion or 20, maybe even a month, but I don't know. But I think they will start very slowly.
Eric, thanks so much. Eric Nielsen, their group chief economist at UniCredit, stays with us. We'll talk a lot more about Europe, China, and also the UK. Coming up, China's crackdown on tech companies steps up. Dow Jones report that Beijing may actually ban tech companies from listing in the US. We'll discuss that next with Eric Nielsen. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, China is stepping up its controls on domestic tech companies. According to Dow Jones, it's now planning to ban U.S. IPOs for tech firms that handle large amounts of sensitive consumer data. The new rules are likely to help Beijing exert more control on Chinese companies, which sidestep rules on foreign investment. We're back with Eric Nielsen, Group Chief Economist at UniCredit. Eric, a lot of the uncertainty also on global stocks over the last couple of months and weeks was regulation coming from China and some of the support measures that we saw from PBOC. How is China different now to what we thought was 6 months ago?
In many ways, I think certainly we have seen a tougher crackdown on the tech industry than I thought would be likely. And I think something bigger is going on here, right? I mean, the Chinese governments, as far as I can judge, have got themselves in a whole lot of conflicts abroad. Some of their Belt and Road Initiative have not panned out quite the way they expected. There are issues with the bigger players, America and India, for example. And domestically, you have the issue of the tech industry, where obviously they have decided that there are some of these entrepreneurs who've got too much power. And now we're shifting to the issue of redistribution and not only growth. So at the same time, as far as I can judge, you have power monopolized more than you've seen ever since Deng Xiaoping, probably, or even before that. So I think the uncertainty out of China is actually quite substantial and bigger than people realize. And it's a bigger story than the individuals. You can explain every single one of them, but there's a bigger picture here.
But Eric, does that mean it could be a destabilizing force for the world economy?
That is I don't know the answer to that, but let's start by saying that I am almost 100% sure that 5 years from now, China will not grow by 5 to 6%. Just demographics and everything else, that will drop to maybe 2-3% or thereabout. This is not controversial, at least outside China, but this is the first part. The question is, how do we get from here to there? And the risk, as I see it now, with all the conflicts domestically and externally, is the risk that it will be more abrupt. The famous Rudi Dornbusch point that the economists, we forecast something, it takes longer before it happens, but when it happens faster. And I think this could be an issue here with China also.
Eric, I have a million questions, but we are running out of time. So we talk a lot about supply issues. We talk a lot about not enough workers in certain countries, the UK, but also other parts in Europe. Does this rebalance out, or is this the real source of concern with food prices also going up as a result of it that could last 12 months, if not longer?
I don't know the answer, but I think the odds are still heavily in favor of this being bottlenecks. So it sort of washes itself out over a 6 months period, 9 months period, or thereabout. There are certainly bottlenecks, and as we talked about China, these bottlenecks could become, the supply chain events could become more than bottlenecks. So that's the risk I'm sort of wondering or worrying a little bit about. But the other side of it, the shortage of labor, apart from the UK, which has the double of Brexit
Eric.
and the pandemic, I think it is short term.
Thank you so much. Eric Nielsen there. This is Bloomberg. A deadly attack at Kabul airport kills more than 100 people, including 13 American service members. Joe Biden promises retribution on those responsible, a group called ISIS-K. Global stocks hold steady and Treasury yields edge lower as investors wait to hear from Jay Powell at the virtual Jackson Hole gathering. And China steps up its tech crackdown. A report states that Beijing is planning new rules to ban U.S. IPOs for firms that handle a significant amount of user data. Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance Early Edition on this Friday, the 27th of August. Now, we're also hearing more and more about climate change from central bankers around the world. How should they address it as a difficult question to answer?
There's no question that climate change has the potential to affect the structure of the economy.
It is likely to induce financial instability if it is not taken into account.
We are not, and we do not seek to be, climate policymakers as such. We have a very specific mandate.
We would be failing on our mandate if we do not see that climate change could impair monetary policy transmission.
We should avoid trying to fill in public policy where governments haven't done so yet. That's not up to us.
Well, it's one of the quiet currents at Jackson Hole, but it will also be hard for the Bank of England to ignore today when climate action group Extinction Rebellion actually holds a protest on its doorstep. Now, for more on all this, let's get to Bloomberg's Ritika Gupta. Ritika, thank you so much for joining us. A contrast in views from Fed Chair, Jay Powell and ECB's Christine Lagarde.
Yeah, Francine, a big contrast here. And this is coming from two of the most prominent central bankers here. It really makes you see just how controversial this is. So Fed's Chair Jerome Powell, he's saying that he's not going to take into account climate change into his monetary policy. He says that's for the government to do. Whereas Christine Lagarde saying that if they don't include climate change in their mandate, then they'd actually be failing their mandate. And this, we've seen how the impacts through inflation. And as to what they're doing, well, the Fed really looking at this through a lens of financial stability. So they're mainly focused on the research here, whereas the ECB going a whole step further. They're looking at climate tests or stress tests. They're looking at promoting climate disclosures. They're looking at buying assets related to those climate risks. And Christine Lagarde has signaled that she wants to go a whole lot further on this. This could be the first central bank that actually uses climate change is in its mandate as well, Francine.
I mean, that's interesting because I thought the Bank of England was actually further ahead in terms of how they look at climate change because of all the stress tests. So, how much more can the BOE do, and is there anyone following that?
Yeah, you're right, Francine. This really started with Mark Carney bringing attention to this. And we know we have those Extinction Rebellion protests coming up in a few hours outside the Bank of England. But as for what the Bank of England has done, well, they've actually this year, for the first time, actually looking at the economic impacts of climate change. They've also doing some stress tests for those major banks and insurers to test their resiliency. And they're also looking at or signal that they will do financial purchases that take into account the government's goals on the environment as well, Francine.
Ritika, thank you so much. Bloomberg's Ritika Gupta there with some of the things that some of the central banks are doing. Now, U.S. and German authorities have begun a probe into DWS and its sustainability products. Now, this comes after allegations that the firm exaggerated the environmental credentials of some of its ESG investments. DWS, Deutsche Bank's asset management arm, slumped the most in 18 months on the news. Now, in a statement released yesterday, the company rejected the allegations and described them as unfounded. The probe adds to existing legal headaches for Deutsche Bank and raises questions over how the nascent world of ESG investing will actually be regulated. Now, for more on all of this, we're joined by Eric Usher. He is head of the UN's Environment Program Finance Initiative. The group has established some of the most important sustainability-oriented frameworks within the industry, including 2019's Principles for Responsible Banking. Eric, thank you so much for joining us. I hear this more and more, and I hear this over and over, is that financial companies are stating things which maybe are better than what they did 2-3 years ago, but could still be considered as greenwashing. How do you fix that?
Well, look, I think we're moving from a niche industry to the mainstream here. And in this case, it's really just an indication of the challenges, including in the relationship, particularly between market actors and regulators. Essentially, as an industry grows up, we have awareness which has grown significantly on ESG issues, environmental, social, and governance factors. And capital has been mobilized in some of the right directions and also become more resilient to external shocks, including most recently through COVID. So good progress, but I think this rush to ESG uptake has certainly had led to some concerns. There are many metrics out there, and many of them, the approaches are certainly hard to compare. Results vary. I think until recently, it's been a little bit of a wild west, and eventually we need some rules of the road, and therefore we certainly welcome having the SEC, BaFin, and other regulators starting to weigh in.
But Eric, okay, so before we have the rules and before we have regulators actually coming up with a common purpose and a common language, what are some of the pitfalls that investors should be wary of? So if I buy a product and it says it's sustainable because they plant trees, is that enough? Like, as a consumer, as an investor, how do I check the products that are sold to me?
Yeah, I think, in Europe, out of Brussels, the EC's FSMA has been working to try to establish a clear taxonomy of what are sustainable business activities, and for financial actors to state clearly, essentially, what they are financing. And so, although, in the start of the industry, it really was much more buyer beware, regulators are realizing that probably we do need to get some clarity to understand where capital needs to flow, and if claims are being made that they are backed by clear methodologies and facts. I can't comment on this specific case, but I think it's clear that regulatory actions like these will certainly ratchet up attention to detail on ESG investing, and probably will help strengthen the sector.
What about transition bonds, Eric? So this is, the idea that as you transition, maybe you're still invested in, certain types of fossil fuel. Again, how should we view that?
Yeah, I'm Canadian by nature, and you're probably aware the Canadian economy is very resource-based. And so the notion of transitioning industries, transitioning sectors is key there. Also in many other places, including in Europe and the United States. So we need to be able to define not only what is green, but what is greening. So what does it mean to move an industry which maybe is carbon intensive today to one that is less so? And to do that, we're going to need new Teslas, we're going to need new upstarts, but we're also going to need to figure out how to transition market incumbents, the industries who have a lot of the capacity to deliver what the economy needs, but they need to figure out how to do it more cleanly with less carbon.
Eric, what are some of the questions that maybe the insurance sector, the banks are asking you? So do you see an appetite from a lot of big institutions to get better? And what do they need to actually make sure that their own projects are better, more sustainable, and actually filter through the real economy, which at the end of the day is what we're trying to do?
Absolutely. And maybe I can talk a little about in the climate area, we have an increasing number of commitments to net zero by 2050, coming not only from industry, but also from governments, and certainly increasing numbers in the finance community. So what does it mean to set a credible target? And, the starting point for that is, 2050 is a long way off. But what, as we've understood through the IPCC and just watching the weather and the climate changing around us, is that we need to get started right away. And so, the UN is convening a group of a net zero asset owner alliance who's been working on this for some time. And they're already issuing 2025 targets, which are typically in the 25% across the portfolio reductions range. So quite significant. And how do you do that? Well, there are different tools. Getting yourself out of the market is one, divestment and others, but it's really engaging with economies, engaging with companies where we're going to get the changes.
Yeah, but is engagement through pay? So is the only way to really make a difference is tying, executive pay to concrete green climate actions?
Absolutely. And it's basically these types of holistic approaches that, unless compensation, unless the who's being hired to lead, who's being hired to deliver, unless getting them aligned with delivering on these needs, both for society, but for companies to prosper. Without all of that adding up, we're not going to be able to deliver both in a financial sense and in terms of societal expectations. So you're absolutely right. Executive compensation is one of the key factors, and it runs all down through the organization that people need to be incentivized to be able to deliver on this transition.
Eric, thanks so much. Eric Usher, they're head of the UN's Environment Program Finance Initiative. Now, coming up, NFTs supplant Rolexes and Lamborghinis as the new status symbol. Daily sales of NFTs reached an all-time high in August. We speak to the founder of NFT Investments next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Angel Feliciano. Hi, Angel.
Hi, Francine. Apple has settled a wide-ranging class action lawsuit with app makers in the U.S. without agreeing to major changes to its policies. A new advertising policy will make it easier for developers to promote alternative ways to pay outside the Apple ecosystem. But the tech giant will still forbid adverts for external payment methods within the apps themselves. General Motors says it will continue its relationship with LG Energy, the battery supplier at the heart of a $1.8 billion vehicle recall. In an interview with Bloomberg Television, CEO Mary Barra stressed it has multiple options on batteries as it looks to secure a leading position in the transition to electric vehicles. And that's your Bloomberg Business Flash. Francine?
Much Angel Feliciano there. Now, non-fungible tokens, which allow holders of digital art and collectibles to track ownership, are staging a resurgence after fading from the headlines during Bitcoin's swoon. While Bitcoin is trading near $47,000 and daily sales of NFTs reached an all-time high in August. Whether it's crypto entrepreneur Justin Sun paying $500,000 for a picture of a rock, yes, a rock, or cartoonish depictions of penguins and apes, NFTs are again at the center of the speculative buzz that drives digital tokens. Well, we're joined now by NFT Investments Executive and Chairman and co-founder Jonathan Bixby. Jonathan, thank you so much for joining us. I know we spoke, a couple of months ago, I think 4 or 5 months ago, and since we've seen Bitcoin being whipsawed up and down, almost on a daily basis. So, do NFT investments actually track the stability of Bitcoin, of cryptocurrencies, or is it like a force in itself?
Yeah, nice to be back. You forgot about stoner cats, just to start with. So rocks, and you have to add stoner cats to that. And the answer is, I think it's a force on it itself. I mean, I think if you look at what's happened even just in the last week with Visa's announcement of buying a CryptoPunk, the reality is, and I said this 5 months ago, that NFTs are the future of digital ownership and commerce. And it is rocking right now in my world. It's pretty crazy.
So who's buying it? Is it is it different buyer than it was last year? Is it people that are invested in crypto, or do you see people that used to just buy art now also going after these stoner cats NFTs?
Yeah, I think it's a combination. I think that the stat that I always like to say to answer a question like this, 71% of millennials would rather go to the dentist than listen to advice from a banker. And when you start to look at those data points and you start to see that 3 billion people on this earth are spending more than 20 hours a week gaming, you start to see that these people are valuing digital goods over physical goods. And so that number has grown year over year, month over month, very, very quickly. And so I think that you're starting to see a digital economy emerge where people are valuing a stoner cat, a rock that is digital over a Lamborghini, a Maserati, or a purse made out of an alligator.
I mean, given how young this industry is, Jonathan, how much do you worry about some of the wobbles that there was in early cryptocurrency? So either fraud or two people having a claim to actually the same token.
Yeah, I think fraud is something that is key in the industry. I mean, I think that if you look at it, you have to be buyer beware. There's a lot of friction to buy an NFT today. A lot of the marketplaces are trying to solve those issues, just like YouTube was trying to solve copyright 10 years ago. So we're starting to see some grown-ups come into the industry, both in terms of financial backup, in terms of venture capitalists coming into the business. I think this is professionalizing very quickly. But yeah, it's buyer beware. It's a roller coaster. It will continue to be a roller coaster for some time.
I mean, I've had some, really fun interviews with former tennis players actually doing an NFT out of their emotions when they won Wimbledon, and some digital art, also some tweets, actually some journalists doing NFTs out of their column. What will it be at the end of the day, Jonathan? Is it more art? Will it be digital art, or really will NFT investments be across a range of things?
Yeah, the reason I started this business is because I actually believe it's at the heart of digital transactions. So, and I think it's a very good tie-in to what Visa has done. It's a 24/7 market. It's global. We're talking about art at this point. We're talking about collectibles. We have to talk about video games because you're starting to see, I mean, take a look at what Axie Infinity has done in the last 6 months as an example. They have a market cap of $4.5 billion US out of nothing on one video game. You're seeing it in sports and entertainment. You are starting to see it in finance. The reality is that NFTs open up digital ownership, and digital ownership and commerce is at the heart of the internet. And then the last point I would make on that is it's no different than what we saw with technology opening up the Facebook and Googles of the world to allow them to advertise digitally. It's no different if you go back to the Netflix example of adding subscribers digitally. Technology opens up massive opportunity, and that's what we're seeing.
I mean, how much, a lot of environmentalists are against this because of the power it generates linked to cryptocurrencies. I mean, can NFTs actually become greener, and how much time do you spend thinking about that?
I spend a lot of time. As you know, I'm the founder of Argo Blockchain, one of the largest crypto miners in the world, listed on the LSE. We at Argo took a green-only stance to our power generation. I think there's a big difference between what happens in Bitcoin, which is a proof of work, mining with a lot of computers, with a lot of power, to what's happening on the NFT side, which is proof of stake mostly. So you're looking at much less computer power. Absolutely a big problem. It must be green. And in NFT world, it must be proof of stake, which is significantly less power than proof of work.
Thank you so much for joining us, Jonathan. As always, Jonathan Bixby, their NFT Investment Executive Chairman and co-founder. Now, coming up, all eyes on Jackson Hole, the virtual Jackson Hole, where later investors await clues on tapering of economic stimulus by the Fed Chair Jay Powell. More on that shortly. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, stocks steady ahead of the eagerly awaited speech by the Fed, the chair, Jay Powell, to address Jackson Hole Symposium virtually. Now, investors, of course, will be glued to the live stream for cues on tapering of economic stimulus. Now, for more on all of this, we're joined by Bloomberg's Noor Ali from our MLive team. So, Noor, good morning, first of all, but how are the markets actually gearing up for the Fed today?
Well, I mean, it is incredibly exciting this morning. We've got the Fed coming up finally. We've been talking about this for weeks and weeks, and it's finally here. Obviously, markets are pretty quiet the morning of because it's just the quiet before the storm, but that does not make it any less exciting. So we're waiting ahead to see what Powell says. Is he going to be hawkish? Is there going to be more dovishness? I suppose we'll just have to wait and see.
Yeah, so if he is more hawkish, and I guess that would be a surprise, but we do have the Delta variant. How does that play out in the markets?
Well, look, we've had some of the alternate members from the Fed come out yesterday, push for a taper despite the Delta variant risks. You know, you've had the Fed's George, you've had Bullard, and you've had Kaplan come out yesterday, and they all really reiterated that position. They want to see a tapering a bit more, but they're also alternate members, so they're not voting members, and they may not weigh on that sentiment very much, but they also know what's going on. So in terms of what happened yesterday, we saw a bit of a wobbling when it comes to stocks. First of all, there was the unfortunate bombings that happened with Afghanistan that really pushed stocks lower. But then as Kaplan was speaking, the stocks went higher as well. So really, there's a bit of a sway here with what markets are going to do.
Nora, when you look at some of the other things, right, I mean, market concerns are also around China, PBOC, maybe certain companies not being able to IPO. How does that play out?
Well, when it comes to Chinese equities in particular, anything that PBOC does is of interest, you know? And so when they've signaled that they may cut the RRR rate for a very specialized part of the market, so that's just for banks to spend on rural parts of the country, it does give the assets just a bit of a boost at least there because it shows that the PBOC is willing to be flexible. Now, obviously, it's not the same as a base rate change, but it does give that insight that we might see a bit of a green sea on Monday, you know, come when the markets open there.
Nora, is there anything else that's on your mind? I know we've been talking about, of course, inflation ties into what we could hear at Jackson Hole, but supply chains, I know we talk about chips. Is there anything else that you're going into the Friday and into your weekend reading?
Well, you know, I'm looking at commodities. You know, we've got September 1st OPEC meeting that's going to come, and that's going to highlight a lot of the tensions that are coming. But today, I'm going to be looking at the function USSW that's going to look at swaps because I want to determine how the market is pricing what Powell is saying. So if swaps move tighter, that means the markets are expecting Powell to be a bit more hawkish because that means tapering is going to come sooner, but if they move wider, that means they expect more bonds outperformance. So the function is USSW, and you'll be looking at U.S. swaps there to tell how they're performing.
Nora, thank you so much. Bloomberg's Nora Al-Ali there joining us today, and stay tuned for all of our special coverage of Jackson Hole. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Our Lisa Abramovitz will be in New York. Of course, we'll have a full roundup of what's happened in Jackson Hole or what will happen in Jackson Hole. We talk inflation, we talk treasuries. The other, of course, big story that we've been talking about throughout the hour is China actually cracking down on a lot of, you know, some of this activity that we saw, for example, for IPOs. So the Communist Party has signaled once again that it will rely on a mix of policy, but also market forces and private philanthropy to create what they call a more olive-shaped income distribution, fat in the middle and tapered at the end. We'll have plenty more on that throughout the day. This is Bloomberg.
He's going to have to tread a very fine line with this balancing act to not come across as too hawkish because he's so optimistic about the US, or indeed just too bearish because he's very much bringing forward this uncertainty and downside risks from COVID.
We could be looking at New Year before we see tapering come in, and they're very, very keen to avoid the tantrum again.
As I look at the progress that the economy has made so far, it really does suggest that we've come to a point where we can begin to ease up on the amount of accommodation provided to the economy.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, it's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, August 27. Happy Friday. Our top stories today. Hanging on, Jay Powell's every word. Investors looking for clues on the Fed's next move, hoping to find out more in a few hours when the central bank chief speaks at the Jackson Hole Symposium. It's virtual. Kabul catastrophe. Those deadly bombings have shaken up President Biden Afghanistan's exit strategy. And bumpy road for Peloton, while shares fall after the fitness company comes out with a downbeat forecast. Well, I'm Francine Lacqua here in London, Matt Miller in Berlin, Lisa Abramovitz in New York, and Katie Lyons is off today. This, Lisa, is the market day we've been waiting for, 1 or 2 weeks, because finally we got Jay Powell, and finally we may have a bit more clue about what happens with tapering towards the autumn.
I'm laughing because everybody's been waiting for this day. Everybody's been saying, this is it. And then they say, and nothing will happen. And then we'll wait for next Friday. There is this feeling of waiting for Godot, and you can feel that throughout markets. However, there is a little bit of action over in China. Not only do we get regulatory pressures and regulatory developments with respect to technology companies, potentially banning them from U.S. IPOs if they have data-sensitive kinds of businesses, but also there is speculation that China will engage with a targeted rate cut to help more rural borrowers. They want to increase the credit impulse just a touch to support the economy. You're seeing the Shenzhen up about 0.5%. Over in Japan, you're seeing a little bit of softening. There's ongoing supply chain concerns. Not a lot of action, however, ahead of the Fed that will determine a lot going forward. There is a bit of dollar weakness today, which sort of speaks to the risk-on feel that you're seeing in the S&P, in the NASDAQ as we head into the unknown. However, the unknown probably looks a lot like the known, which is steady monetary policy and supportive earnings. And then the 10-year yields is actually retreating a little bit. Interesting to see this ahead of likely taper talk. The two hawks yesterday that came out, non-voting members of the Federal Reserve saying it's time to start tapering stimulus. 1.33%. Crude. This is the most notable mover, Matt, I think, for the week. What we are looking for is the biggest weekly gain going back to October, Matt.
Yeah, very interesting stuff. And, that is juxtaposed with the fact that we're just not seeing a lot of movement here in terms of the live trade, much like any day when we would have a Fed decision. Traders tend to sit on their hands for a little bit until that decision comes out. So you see, if you look at the world map here, a lot of gray on the screen, which means we're not moving too far up, we're not moving too far down, it's just kind of stuck in the middle. You have that in France, you have that in Germany, you have that in the UK. There are still moves and there are still places to look. If you take a look at the stock 600, you can see that we have some general direction from that, but it's only 0.02%. The 10-year German bonds are negative 41 basis points. They've come up. That's better than negative 50, which is what we've been seeing for the past couple of weeks. And then you see moves in, well, you don't really see moves in the euro and the pound. You did before I came on the program, but now they're completely unchanged, or almost completely unchanged. So, Francine, we're really waiting for direction. Yeah. I like the Beckett reference, Lisa Abramovitz. Waiting for Godot here. Who was Godot? Who was Godot?
And why is Godot important? Francine, save us.
Yeah, I mean, I saw a Godot play that lasted 3-4 hours, and actually I fell asleep. So let's hope that we don't have a Godot day, although it does feel like we've been waiting for it for the last 2 weeks. Stocks are stable. Let's call it that, to be a bit more positive. Stocks are stable for the moment, and also there's a flood of Treasury options expiring today, so that could raise a bit of volatility this afternoon. Now, this is a look at what else is ahead today. Joe Biden sitting down with Israel Prime Minister Naftali Bennett after the meeting was postponed from yesterday. We'll get July U.S. personal income and spending data, 8:30 a.m. New York time, 10 a.m. All eyes will be on Jay Powell's speech from the virtual Jackson Hole Symposium. Now, to Afghanistan, though, and President Biden vowed to continue evacuations after explosions in Kabul killed at least 13 U.S. service members and said the U.S. will retaliate against those responsible for the bombings.
For those who carried out this attack, as well as anyone who wishes America harm, know this: we will not forgive. We will not forget. We will hunt you down and make you pay.
Let's get straight to Emily Wilkins, Bloomberg government reporter, joining us from Washington. Emily, after those horrific attacks, actually the situation in Afghanistan got a whole lot more complicated. What does Joe Biden and what does it mean for the evacuation efforts?
So this is what everyone did not want to see happen. They did not want to see more American service members die. I mean, President Biden himself said that part of the reason for ending this war is that he did not want to call any more parents, letting them know that their child had died over in Afghanistan. And now he's going to have to do that. There are still a lot of concerns about getting people out, but the Biden administration is sticking with that August 31st deadline. They're saying they are going to be able to get people out by then, and they say that other threats make it so that they really cannot extend that deadline.
We did hear, though, from the president, we will rescue the Americans who are there. We will get our Afghan allies out. So he's essentially making a promise to get people out that right now have no escape route. You have to wonder how he's going to do that and if the American people are going to hold him to his word.
There definitely are more complications. I mean, yesterday's bombing was certainly one of them. It was something that American intelligence officers warned people about, so there was a bit of a sense it was coming. Still saw more than 100 deaths of U.S. plus Afghanistanis. Beyond that, I mean, it is becoming more difficult. There are fewer and fewer planes taking off. Fewer countries are sending planes because they know that the U.S. is about to leave the region, and Biden is not budging on that August 31st deadline. I mean, the administration has promised that they are going to be there for any American citizens who remain in the country, but it's hard to know exactly how they're going to do that. The embassy is going to close. It's not going to be staffed. There's not going to be a troop presence there. And so it really remains to be seen how some of the promises that the Biden administration is making right now, promises to get all Americans and Afghanistan allies out of the country, promises to retaliate for the bombings yesterday, exactly how they're going to do that and accomplish that if they are fully leaving the country.
Emily Wilkins of Bloomberg Government, thank you so much. And the reports say that there are about 1,000 Americans still in Afghanistan. Most of them do plan to try to get out. Meanwhile, the Jackson Hole Symposium is kicking off virtually today. Investors will be watching for any indications in the Fed's taper timeline and Chair Jay Powell's speech. Bloomberg's Michael McKee spoke with Kansas City's Esther George ahead of the meetings.
I think it's important to really center on when we believe the progress in the economy is sufficient to start that process. And that's really where I'm focused. In that sense, I think we should get started this year so that we can begin to pare back the amount of accommodation, watch to see how the economy unfolds after that.
Esther George is a non-voting member. Also non-voting member Jim Bullard of the St. Louis Fed coming out with similar hawkish comments. Michael McKee joining us now, Bloomberg International economics and policy correspondent. Wonderful interview, Mike. I was looking, though, at these non-voting members that were coming out with hawkish proclamations, or relatively so, and I'm wondering how indicative are they of Fed Chair Jay Powell, of the main party members of the Fed that will make the decisions?
Well, the good news is I am here. I'm not Godot. I don't know which one of you is Vladimir or Estragon, but I can promise you Jay Powell will show up today and probably not embrace any of their arguments, not because he doesn't believe it, but because at this point, there's no point in him doing it. The Fed is not really that divided. The question when you ask Esther George about when do you start tapering, and she said sometime this year, pretty much everybody on the Fed is on that page. They just have different timelines, October, November, December. Does it really make a whole lot of difference? The problem for Jay Powell is that people think he's the Fed, not Esther George. So if he says something about tapering, then the market's going to take it as gospel. So he's going to be very careful in what he does. The rest of the day at Jackson Hole is devoted to academic papers about how to deal with the kind of crisis that we just lived through. You can see some of the papers that are going to be discussed later today. The agenda has been released. But again, it is the first event, the Jay Powell speech at 10 a.m. Washington time. Unfortunately, Matt Miller, you got to wait till cocktail hour in Germany to be able to hear him. But that's going to be the thing that everybody watches today to see if he says anything. And the betting is kind of, he's going to try to avoid it as much as possible.
Michael, cocktail hour, Jay Powell, it seems like a match made in heaven, actually, for Matt Miller. When you look at some of the questions that the market has is, when do they start raising rates?
Yeah, that's going to be a point I think that Jay Powell wants to emphasize, that tapering is not tightening. It's not raising rates. The last time the Fed tapered, it took them 2 years because they were trying to raise rates first. And they couldn't raise rates because of the way the economy developed. And so we saw market rates go up. That's the last thing the Fed wants right now. They're going to try to get the taper in because they don't think it's going to push market rates up significantly before they start raising rates. And so for the market, it's a little bit connected at the back end. And Powell wants to make it clear that this does not mean that you should start selling bonds.
Michael, thank you so much. Michael McKee, of course, who will be following the Jackson Hole Virtual Symposium for us. Now, turning to Peloton, the company, tumbling following their earnings report and a weak outlook for 2022. Now, for more on Peloton's troubles, Bloomberg's Ritika Gupta joins us. Ritika, what did they find out in terms of inventories?
Yeah, Francine, that was a key point there, which I will get to. Really has been a rough ride for Peloton, and there are those three key issues here, one of which you mentioned, but I'll start off with the first one was revenues. They did actually beat in the previous quarter, but it is really about its forward guidance, its outlook that it just doesn't see as so rosy. The outlook coming in lower than projections. They also had a price cut to their bike of $400. This is the second price cut that they've had this year. This, along with rising freight costs, rising input costs, this is really going to weigh on their margins. This is something that we've really been focusing on as well in this current season of earnings. And then, as you mentioned, that accounting scandal, this is related to tracking its inventories. So this, they say they won't have to restate their financial statements, the previous ones, but it is really a big knock-on confidence. And this is after a year where it's had a host of problems, really. That treadmill, that Tread Plus, that newer product had to be put on hold. It remains on hold. This is after it was linked to several injuries and the death of a child. But I will point out one bright spot in the earnings, guys. They did see subscriber growth growing to 3.63 million. So that was above what the forecasts were.
Ritika, this was one of the big winners, though, in the pandemic. Obviously, a lot of people at home working out on their Pelotons. How does it fare against the other tech companies that were big stay-at-home stocks?
Yeah, Matt, and if you look at the shares since the IPO, they're actually up some 300%, but it was really 2021 where they had a big net loss there, maybe because of that Tread Plus issue, also people getting back to the gyms as well. But if you look in within the NASDAQ 100, it is actually the third worst performer, and actually out of the four worst performers, it's the only one that you'll see here that isn't actually Chinese tech. And we know that tech companies in China really suffered after that rout, so really putting them in line with that there, the pain continuing here for Peloton.
Yeah, I mean, I just find it incredible. They're one of the, they want to, become more mainstream, so are actually cutting prices by 25%. It's just incredible. I don't know anyone. I don't know many people that do, but I'm not part of the exercise gang. Ritika, thank you. Ritika Gupta there with the very latest on Peloton. Lisa, I'm absolutely sure that Matt Miller has a Peloton. 100%. I kind of feel it in my bones.
No. And you know what? 100%. I have a feeling that he sticks his dog on the Peloton and takes pictures and sticks them on Instagram. Am I right?
I'll tell you what, it's not true.
100%.
I did buy a rowing machine after House of Cards made them very popular, but I only used it twice. So
I give him 48 hours until he buys a Peloton.
You think
Coming
so?
up. Yeah.
They're cheaper
Coming
now.
up in the
They're cheaper.
Plus, it's cheaper. Coming up in the next hour, we'll talk a lot about stocks in Jackson Hole with John Hardy, Saxo Bank head of FX strategy. This is Bloomberg.
As I look at the progress that the economy has made so far, it really does suggest that we've come to a point where we can begin to ease up on the amount of accommodation provided to the economy. That's different than suggesting that we have arrived at the objectives that we have in terms of full employment and price stability. So I don't think that it changes my own calculus that it is time to begin to make those adjustments given the gains we've seen so far.
Well, that was the Kansas City Fed President Esther George speaking with Bloomberg's Michael McKee. Now, we're delighted to be joined by Eddie van der Veld to look at the markets and Jackson Hole, our Bloomberg MLive strategist. Eddie, we're kind of having a laugh off air that we've been anticipating Jackson Hole so much, and at the same time, we're not really expecting that much either. I mean, psychologically, it's pretty intense.
You know, there is this tradition in markets where you talk an event up weeks ahead of time and everybody tells you this is going to be the big one. And then as we get closer, people say, well, actually, it's already priced in. We all know what's going to happen. I don't think that's the case here. I think we really don't know exactly how Powell is going to spell it out. And more importantly, how the market is going to react to that. Because if we look at options pricing shows us that really, you know, there's not that much volatility expected from this particular event. If we look at the dollar or FX and bond market volatility. But if we look at how the market has reacted to either hawkish or dovish noises from central bankers over the last couple of days, there's been real volatility in both directions. So I think there is uncertainty, and I think it's focused on the equity market.
Eddie, is there an anxiousness in the markets that they're trying to figure out exactly what to look at? Is that why, you know, at some point there was so much expectation on Jackson Hole that actually we're really at the crossroads?
Yeah, absolutely. I think there's two big variables here, right? One is, do they start this year? And the second is the pace. And different people may be focusing on different things, because they might say, look, they might start in September, but you know, not end until middle of next year, and then it doesn't matter that much, you know, because if it's a really slow taper, it doesn't matter. Or they may say, listen, okay, it's going to be in December, but it's going to be really quick when we start. And I don't know that we're going to get all of those answers today. But look, we've had noises from various central bankers. But Powell is the one that the market thinks really matters, because they think that he is the summary. And he's also tilted slightly dovish. So if he tilts slightly more hawkish now, I think the market will really pay attention.
Eddie, can we take a step back and put this all into perspective of a really slow August where people just basically want to check out and go to the beach? I mean, basically, can you give us a sense of how much people are talking this up, because there's nothing else going on? Volatility in general has been highly suppressed. We haven't seen much by way of actual trading volumes. It's been coming down with people concerned about liquidity. I mean, can you just give us a sense of how sleepy it is relative to prior Augusts?
Oh, absolutely. We on Markets Live, we got really excited by a 0.5% move in the S&P 500 yesterday, because we were like, something moved. It's, you know, but when you break those moves down, you see that all of the volatility is centered around central bank speakers, and all of the volatility. So yesterday we had a little bit of a volatility that centered on other events, but for the most part. So I think part of the reason why we are not seeing really big volume at the moment is because nobody wants to put on a big trade ahead of this, this event that might determine, the months ahead.
Eddie, thanks so much. Eddie van der Veld there. And of course, we'll be glued to our screens in case there's something big coming out of that Jay Powell speech. Coming up, stay with Bloomberg for our coverage of Jackson Hole throughout the day. We'll have interviews with Raphael Bostic, Patrick Harker, and Robert Kaplan, and actually many, many more. This is Bloomberg. Let's get straight to the Bloomberg First Word News. And a divided U.S. Supreme Court has lifted the Biden administration's moratorium on evictions. Now that ends protections for millions of people who fell behind on their rent during the pandemic. Now, justices said landlords are suffering irreparable harm. They also said that the CDC lacked the authority to impose the eviction moratorium. A new study looked at vaccines versus infection when it comes to immunity from the coronavirus. Now, the Israeli study says that people who recovered from a bout of COVID early in the pandemic appear to have a lower risk of contracting the Delta variant than those who received the Pfizer-BioNTech vaccine. Now, the results are good news for patients who already successfully battled COVID. China has issued its most comprehensive warning yet against the excessive work culture of big corporations. Well, authorities spelled out how the so-called 996 practice is illegal. That is, working employees from 9 a.m. to 9 p.m. 6 days a week. Well, there's been a growing backlash in China against the punishing demands of the private sector. And President Biden's advisors may recommend that Jay Powell be nominated for a second term as Fed chair, with Lyle Brainard being the central bank's vice chair for supervision. Brainard is also a contender for the Fed chair position. Elevating her to vice chair would actually ease concerns of progressive Democrats who don't like Powell's record on regulation. So as we look forward to Jackson Hole, Lisa, a lot of the focus is probably on, if Jay Powell stays, simply because he's seen as one of the most, dovish central bankers in the world right now. But Lael Brainard is along the same lines.
She's along the same lines, although on the regulatory front, she takes a harder line on Wall Street. I do wonder how widespread that focus is. However, I don't think President Biden is going to want to shake the boat right now, given the fact that Jay Powell is largely accepted by markets, and any change is going to create more volatility. It's hard to see that, Francine.
Yeah, and I have to say, it's probably what the market is more, is more worried about. If there was noises, I mean, it's the second time that our people in Washington have this great scoop that they're leaning towards Jay Powell. If it weren't the case, could we see a bigger taper than actually, a Jackson Hole speech?
Yeah, I mean, that's what a lot of people are thinking. Also notable that Secretary of State Janet Yellen came out, not Secretary of State, Treasury Secretary, and said she wants to see him again.
Yeah, we'll talk a lot more about this with John Hardy of Saxo Bank. This is Bloomberg. Finally, it is Jackson Hole, virtual Jackson Hole day. At least I don't know if the markets will move a lot because the expectations are quite low, but maybe the market in anticipation is hoping that something happens so that they have a clearer picture possibly of what tapering looks like.
Yeah, right now it's pretty quiet, however. Right now we're seeing muted action, although a bit of a risk-on feel across the board, particularly with respect to U.S. markets. You could see that we are getting a lift there. Also, we are seeing a lift in the European markets. I got to say, Francine, though, it has been incredible when it comes to how quiescent the market has been ahead of what we expect to be something, at least in terms of guidance with respect to the taper. Stocks over in Europe is up a whole less than 1 percentage point, actually less than 5 basis points. Meanwhile, S&P futures up 0.3%. The 10-year yield a little bit lower, 1.33%. And the dollar a bit softer. But Francine, really to me, the big mover on the week has been oil. One of the biggest weekly gains going back to October. There does seem to be at least a sigh of relief when it comes to the Delta variant and the effect on travel and on the economy, Francine.
Yeah, and next week actually is OPEC, so watch out for possible more oil moves. I know oil also moved on the back of a storm menacing the Gulf of Mexico. Now, joining us to talk about Jackson Hole, maybe to talk a little bit about commodities or commodity currencies as well, oil currencies, is John Hardy. He's head of FX strategy at Saxo Bank. John, thank you so much for joining us. The focus a little bit on Jackson Hole, the focus then on the data going into the autumn. How does it all move dollar?
Oh, there's so many moving parts here, and there's both the initiation of the taper itself, a lot of uncertainty around that. How much is this Delta variant causing concern and have the Fed wanting to pause? How much is the Fed concerned about the debt ceiling debate and a big change in the supply and demand dynamics, or at least the supply dynamics of treasuries, as we're going to see the Treasury building back up and increasing issuance post that debt ceiling fight. So there are a lot of moving parts. My belief is that we're going to see a quicker taper, even if I'm as uncertain as everybody else on the start of this taper. I think the Fed wants to taper down to zero quite quickly after beginning. And I wouldn't be surprised to see that coming in Q1 already next year. I think they want to be nimble on responding to inflation risks. I think there's some disquiet there, maybe more disquiet than we've seen in the broader communications among the Fed members. And it's easy to get this taper out of the way when you have more than $1 trillion, for example, built up in the Fed's reverse repo facility. So that's my sort of what I'm looking for to get. I don't know how much of that message we're going to get from this Jackson Hole speech, but that's one thing I'll be looking for.
It's interesting that you say that perhaps they're going to taper faster than people in the market are expecting. One of the biggest transmission mechanisms in that surprise for markets may be the dollar, in terms of a stronger dollar, since a tightening policy usually results in that kind of trend. What are you expecting when it comes to a stronger greenback and the disruption that it creates in the FX channels throughout the rest of the world?
A very key point, because as we know, the stronger dollar, especially when it strengthens at a certain pace, becomes very destructive for broader markets. So that will be a self-correcting mechanism in that if we do see a dollar spike. But I think longer term, whether the Fed tapers is just, it's something at the margin. As long as we're not seeing any sort of unseating of rate expectations, we don't necessarily need to see anything other than a bit of persistence in this dollar staying firm. We also have to look at what are the real returns for the dollar. In other words, what is inflation versus the yield you're getting? And I think as we wear on into 2022, this is going to be one of the concerns for the U.S., especially with its constant current account deficit, that keeps any sort of significant dollar strength at bay, even if it does strengthen a bit here over the next couple of months as we deal with this idea that the Fed is going to taper and maybe taper a bit faster than previously expected.
Hey, John, Matt Miller here in Berlin. Tom Keene used to always tell us to look at the euro yen, and I thought it was a great way to judge risk on, risk off. Yesterday, Kriti Gupta, who's one of our cross-asset reporters, pointed out she likes to look at the Aussie dollar yen, and I pulled up a 5-year chart of that, and I thought it was pretty incredible how well that works as an indicator as well. Is there a pair that you like to look at to try and judge the macro picture?
Well, it's actually great you bring up the Aussie yen. This is sort of the classic risk proxy, and it's also a great proxy for a lot of what's been going on since last year. We had this belief in a huge new commodity super cycle that, of course, we saw a significant interest in rotating into commodities and those prices coming up. But at the same time, you have an Australian dollar that features the lowest, I think, still features the lowest 2-year rate of any sort of currency with arguably a chance to ever hike rates again. A very odd place for it to be, historically speaking. And meanwhile, the long end of the curve around the world has been very, very suppressed in terms of yield. The Japanese yen is so much attuned to what's going on in longer yields there. So, but Aussie yen, I think, is more interesting than Euro yen for capturing that aspect of things. I would say Euro yen is somewhat lower beta to all of this. So yes, Aussie yen is probably a single currency pair that captures the most numbers, or the highest number of inputs, you could argue, globally. So I think that could continue to be the case, especially where we are going into a winter with all this uncertainty around Delta, around the Fed's tapering plans, and growth.
Yeah.
We're facing a fiscal cliff in some places, et cetera.
I will point out that back when I used to talk to Tom about Euro yen, that was during the Euro crisis. So I think it was a more relevant pair at the time. We're out of that, and the Euro is really increased its strength on a world level. I think everyone would agree. Meanwhile, you mentioned the fiscal cliff. The U.S. is just loading up on debt. I mean, as if MMT were accepted and we're all going, full force on it. Are you concerned at all about the dollar as a world reserve currency, especially when you see a stumble in Afghanistan the way we have?
I would not link this to Afghanistan, my coming comments. That's, I think, a separate and very concerning issue. Of course, this is the existential question for global financial markets. They're resting on a single currency. You have, a currency where the policy focus should be domestically, and we have a U.S. that potentially is withdrawing. We have a rival in the global scene in the form of China, but we still have the dollar as very much the dominant global currency. It is existential. Yes, I have massive concerns around this, but I don't see any alternative for now. But how this shapes up is, I think, is far too big for however many few minutes you're going to have me on the program here. And definitely a key concern going forward.
All right, John, thank you so much. We'll have to get you back on. John Hardy there, head of FX strategy at Saxo Bank. Now, coming up, the evacuation window at Kabul airport is closing. More on the aftermath of yesterday's attacks. That's coming up next, and this is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, Geeta Gopinath, IMF chief economist. Plenty more on that. This is Bloomberg.
For those who carried out this attack, as well as anyone who wishes America harm, know this: we will not forgive. We will not forget. We will hunt you down and make you pay.
We know that the window of time is closing, and it could be 10,000 people who are brought to safety. But I would like to make it clear again today that we will not forget those who are not going to be brought to safety by the airlift.
What this attack shows is the importance of continuing that work in as fast and as efficient a manner as possible in the hours that remain to us, and that's what we're going to do.
All of us are put in a situation which is no more under control. I think de facto nobody expected such a rapid and brutal situation in Kabul.
Sadly, it was not unexpected, as we'd previously flagged. But even events of that nature, when they are sadly expected, still make your heart sink.
World leaders are speaking after bombings yesterday outside Kabul airport. Now, the blast killed at least 13 U.S. service members and 60 Afghans. President Biden has vowed to go after the terrorists as Islamic State has claimed responsibility. Well, joining us now for more on all of this, Rosalind Matheson, Bloomberg executive editor for international government. Ros, when you look at how this will change evacuation efforts, does it actually, distill the resolve and accelerate them? Or is there a danger that they won't be able to get enough people out in time?
What we're seeing is countries already coming to the end of the evacuation flight. Some countries had planned to finish yesterday anyway. Germany included. Others are saying, well, they're pretty much done anyway, including Australia and the UK in a matter of hours. Because of the August 31 deadline, most countries were planning to finish these flights soon, no matter what. And the attack probably hasn't changed that significantly. The US is saying it's sticking to its deadline of August 31 and that it will evacuate more people in the next few days. That said, they said there's 1,000 people left there for them to get out. Not all of them will want to go. And the reality is that others, of course, will be left behind.
I thought it was interesting that we saw Chancellor Merkel yesterday say, the allies left behind will be forgotten, will not be forgotten, but they're not going to go back and get them out anymore. So they're done. On the contrary, President Biden, Roz, said, we will rescue the Americans who are there. We will get our Afghan allies out. So is he making a promise that he's not going to stop until he's completed that mission?
Well, if you look at the rhetoric from the White House overnight, not just President Biden, but other officials, they're absolutely dead set that August 31 is the last of it. So then it gives them a few days to get the rest out. They say that about 2/3 of the 1,000 Americans left want to leave, the others want to stay. So what you can see potentially is a narrative that those who are left behind opted to do so, whether that is real or not, whether they couldn't actually get into the airport to get on a plane to leave. But he's absolutely adamant about that. And for political reasons, too, because, of course, the attack and the fatalities amongst the U.S. service people is a reminder to the American people of why they wanted to get out of that war in the first place. And the majority of American voters have been saying for a long time that they want their troops brought back and they want the U.S. out of that conflict that's been going on for 20 years. And in the long run, that's the thing that Biden's probably going to listen to.
Roz, what can you tell us about ISIS or ISIS-K? Did they do it to be in the limelight? Was this attack to try and challenge the Taliban, or were the target Americans?
Well, it was probably a bit of both because, of course, the Taliban and ISIS are not friends at all and have fought each other in the Middle East for some years. And, of course, this is a local offshoot of ISIS as well in Afghanistan. And so this is probably a message to the Taliban to show the world, the Taliban says they're in control of Afghanistan, that they've got a discipline going, that they're very much in charge. We are out to show that they're not entirely in charge, as they say. And so it's probably a message for the Taliban, and also it's a chance to needle the U.S. as they go out the door.
I wonder if this isn't a narrative that the West, takes too seriously or places too much weight on, Roz, because the Taliban and Al-Qaeda weren't friends at all either, and yet they've worked together. The Taliban and Iran definitely weren't friends, and yet they've worked together. And I've heard from some members of the military that, we just put too much weight on this. These guys are going to work together as they have a common enemy in America.
Well, the Taliban has worked with Al-Qaeda, certainly, but they've fought each other for many years, and they have fundamental differences in ideology. Of course, the Taliban is more of a nationalist outfit, so Islamic nationalism. Islamic State, of course, is an expansionist outfit that wants to create caliphates around the world. They have fundamental differences in ideology and perhaps a generational difference as well, and certainly they're competing with each other. So you can see a reason for Al-Qaeda and the Taliban to collaborate. They're much closer ideologically, but you can see that ISIS is possibly looking to cause mischief for the Taliban inside Afghanistan. What we're probably going to see collaboration on, oddly enough, is the pairing of the Taliban and other countries around the world who've resisted working with them over the years. The reality is that the U.S. is going to have to engage the Taliban and continue to do so, as are countries like China, Russia, and Europe, even if they don't want to recognize the Taliban as the new rulers of Afghanistan. That's where the interesting cooperation is probably going to start coming in.
Absolutely, and we'll continue to follow this with you. Roz, thanks so much for joining us. Roz runs our international government coverage for Bloomberg News. Let's get now to Germany. Elections coming up in just over a month. The Social Democrats are cementing their lead over Merkel's CDU with 2 polls out today, putting them ahead. Bloomberg's Maria Tadeo joins us for more. And, you know, the CDU has had some big problems in the past months, starting with the floods. They also have elected a chancellor candidate that isn't terribly popular.
That's very polite.
I mean, I don't know really how to put it. You know, Armin Laschet hasn't proven to be terribly likable next to Olaf Scholz. And now they've got this issue, which yesterday someone called Merkel's Waterloo. So what does this mean for the CDU?
Bild did, the newspaper, they had a big editorial saying this is a huge catastrophe for Germany. And Matt, we talk about the United States, but Germany had the 2nd largest military deployment in the country. As you also said yesterday, they said the evacuation is done. We're not going to leave people behind. But the reality is that Germany is leaving people behind. You know, the people who are in Afghanistan are probably going to stay in the country. So this was overall very badly managed. And, you know, we were talking about this before the polls. You know, of course, the SPD is now really ahead, but the reasons for it was really interesting, right? So we had the floods, we had Armin Laschet, and now there's also playing into this. So it's this combination of factors.
And Scholz, you've got to give Scholz some credit, right? Because people, even who don't want to vote for the SPD, do appreciate the job he's done as finance minister.
Yeah, and you know, yesterday he put out his first commercial for the election for the SPD, and it's funny that this was all about Olaf Scholz. There was no SPD, there was no Red, there was no Social Democrats. It was really about Olaf Scholz, his career, and my credits and my credentials as a politician for so many years. So it's a campaign that's very much focused on him.
Maria, thanks so much. That election, of course, a month away, almost to the day. Our Maria Tadeo in Berlin with Matt Miller. Now, coming up, challenges ahead for electric vehicles. Part of our interview with the General Motors Chief Executive, Mary Barra. That's coming up next, and this is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London. Now, the CEO of General Motors sees huge opportunity for revenue growth in software and services. Mary Barra spoke exclusively with David Weston on the automaker's transformation.
If we fast forward 10 years, I think the software services, subscriptions, and the other adjacent businesses that we can grow into because of the technology that we have will be equal or greater than what we'll have from from selling the vehicle. That's my vision, and I think that's well within reach when we look at the different total addressable markets and the businesses that we're entering.
What does that do to margins? Do you expect higher margins on the services than you would normally get on a manufactured product?
Well, we see it it today. On our businesses like OnStar, we see a higher margin profile than we do on the actual vehicle. But let's not forget, you've got to sell that vehicle to have access to that. And that's where General Motors also, we have a reason that people should believe that we're going to lead, because we already sell more vehicles in this country than anyone else, setting aside some of the limitations with semiconductors right now. And we have the highest loyalty. So when you look at the scale that we have, and then the software platform that we can access because of that scale, that's where the growth, I really think, is a huge opportunity for us.
You are a traditional car company moving into this software business, as opposed to what some people call a pure play that started out as software. What advantages and disadvantages do you have over against the people who are pure play, who started out there?
Well, I think the transformation that we've made over the last 5 years, it wasn't like we just woke up today and said, oh, we're going to be a software company. We have been on this journey. We've reorganized the way software is developed in the company. We've brought in tremendous numbers of software engineers. And we already have proof points out there. We launched the Vehicle Intelligent Platform starting in 2019 with no issues. And that was all software done internally. So I think we already have many proof points that people will start to realize that we already are a software company, and the fact that we have that capability, and the fact that we have the hardware and the software, and really the relationship with the customer, I think is why we have a really bright future. And I think people hopefully will start to see why we're in, really in a position to capture that more quickly than others, and especially pure play software companies.
Mary Barra there, General Motors Chair and Chief Executive Officer. Now, for more on that interview, catch Wall Street Week tonight, 6 p.m. in New York, 11 p.m. in London. Now, let's get straight to Tom Keene, co-anchor of Bloomberg Surveillance, who joins us now. Tom, the million-dollar question, are you excited about the Jay Powell speech?
Yeah, I am.
Or is it going to be a damn squib?
There's a tradition to this, Francine, and I'm respectful of the tradition, even though we're virtual this year. But I am excited about it. He's under a lot of pressure to provide nuances forward. Kit Jukes with a superb note this morning, framing the calendar, the x-axis out for the chairman. But the backdrop here is what the market is telling the chairman. I'm looking at a 10-year yield. Where is it? I'm new to the terminal, Francine. 1.3374. Let's bring up the chart here, folks. And we do this in honor of Jackson Hole, in honor of the debate and controversy at Jackson Hole. In 2016, Marvin Goodfriend, circle on the left, gave a speech on negative interest rates, and Francine, Adam Posen at Peterson Institute had to be medicated. He was so angry over the Goodfriend paper on the unencumbering of interest rate policy. We now are at a higher amount of paper worldwide at a negative interest rate. This is a backdrop, this debate on zero interest rate policy, as everybody struggles forward, including the chairman.
Did you know Adam Posen is actually my step godbrother? Double-step godbrother, in a way.
Double-step godbrother.
My mother married a man whose sister married a man who was a mentor of Adam Posen. In any case,
Sounds like a bad episode of Love Island. Continue.
What I wanted, every episode of Love Island is bad. What I wanted to talk about is the housing market. Obviously, I'm in the market, and yesterday Jim Bullard said he's worried about the Fed's effect on the housing market. You think we're going to hear anything about it?
My basic take on the housing market, no, not really. It'll be a social message, yes. But, Matt, I remember in 2006 looking at up 13% on housing and going, that can't last forever. That's where we are now.
All right, Tom Keene, thank you so much, co-anchor there of Bloomberg Surveillance. So more Bloomberg Surveillance, as you all know, is coming up ahead. We'll hear from Atlanta Fed President Raphael Bostic, amongst others. We're all over Jackson Hole, and we also look at corporate stories. This is Bloomberg.